Lovely to have you here today.
Thanks, Georgia. It's great to be here. I'm really excited to break everything down about the first home guarantee scheme.
Yeah, absolutely. What have you seen since the scheme has sort of kicked off, especially recently? Have you seen much changes in the market?
Yeah, look, there has been a few changes in the market. Especially the scheme's not new, so it has been around since 2020. A lot of first home buyers have been using it. They've just updated the rules and removed some barriers to entry and some eligibility criteria. So since that has happened on the 1st of October, we've definitely seen a lot more movement in the market, a lot more first home buyers being added to the market. So that increases that demand factor because there's a lot of more first home buyers that can use the scheme and get in with that lower deposit. So what we have tend to see across Australia is that markets have risen, which we assumed would happen. Now, that's not to say everywhere in Australia has seen that impact, but that is kind of the general feedback that we're getting from our customers that we're helping and our clients that yeah, that market's really increasing across the board as well.
Yeah, interesting. It'll be interesting to see how it plays out over the next few months. For those who've just sort of jumped on, we haven't started the webinar yet. We're just sort of waiting for a few more members to join. We'll get started in about a minute or so. But yeah, grab a coffee, sit down, relax, and get ready to enjoy the first home super saver scheme webinar that we're hosting today. Jack, what what's the most unique or sort of interesting property that you've helped a client buy?
Yeah, look, it's a good question, Georgia. To be honest, there's not really a unique or certain property that stands out to me because every client's on that unique journey that I'm grateful enough to be involved in, and that's what I love about my job. Now, we help first home buyers across all of Australia who are buying in different locations, different areas, different kinds of property. So there's not that one single property that does stand out. But what's most interesting is what I find that clients don't buy on their journey. So, just an example, recently I had a first home buyer client who found a property that they absolutely loved. It ticked all their lifestyle goals that they factored in. It was in a great location. It had a great floor plan, everything like that. Ticked all their boxes. Now, we did the final checks and did run a building and pest inspection before they purchased. And what they actually found was about $30,000 worth of damage in the roof. So what that shows is that by having that protection, having that running that building and pest inspection as well, it just shows that if you've got the right support and people in your corner, that's really interesting to me. And that client, for example, would have purchased that property the day they inspected it. They would have made the offer if they didn't know about that kind of hidden costs in the roof. So to answer your question, not really a certain property that stands out, but it's just interesting to see what clients pass or what clients discover along the journey with houses they don't buy.
Yeah, and it's such an emotional journey too. So you're really like you're at the forefront of clients going up and down in terms of what they want and what they don't want. Look, we'll get started. I think everybody's jumped on now. Jack, really, really lovely to have you here today. For those who aren't aware, Jack is a mortgage broker at Alcove, and he's also the host of the First Home Unlocked podcast. So welcome, Jack. Thanks so much for joining us.
No worries. Thanks for having me, Georgia.
And for everybody else, I'm Georgia. I'm an associate advisor at Fox and Hare, and Jack and I will be taking you through, um, I suppose, the purpose of today's webinar, which is to help first home buyers navigate the market and understand the home guarantee scheme. So, understanding the market, I suppose, more so from the lens of the home guarantee scheme than the market, as a whole. So, Jack, the first sort of thing that I want to go through with you is understanding what the home guarantee scheme actually is. So, in simple terms, what is it and what does it do?
Yeah. Okay, let's start there. So, look, the first part of understanding the first home guarantee scheme is actually to understand what lender's mortgage insurance is, or LMI. So, what tends to happen is traditionally, if you had less than a 20% deposit, you are charged lender's mortgage insurance. So, what this is a protection to the lender, not you as the buyer. Now, it's added to your loan amount and you pay interest on that part that's added to your loan amount. So it can be very costly. It can cost up to tens of thousands of dollars that's extra that's added onto your loan amount. And you also have to pay that higher interest rate. Now, the First Home Guarantee Scheme is a federal government initiative run by Housing Australia. So it helps eligible first home buyers buy with a minimum 5% deposit and avoid paying that lender's mortgage insurance. So straight away, you're saving tens to thousands of dollars on your first home purchase. Now, the key understanding about this guarantee scheme is it isn't a cash grant. So the government's not giving you extra money to put towards your deposit or anything. They are acting as a guarantor behind the scenes up to 15% of the property's value. So when you go to the lender with your 5% deposit, they treat you as if you had a 20% deposit in the bank's eyes. So again, you avoid paying that lender's mortgage insurance. You get access to competitive interest rates. So like I mentioned before, usually you would pay that higher interest rate. When you use the scheme, you get the 80% interest rate. So you get that competitive rate. The government has no ownership or shared ownership in your home because they're just acting as a guarantor in the background, which is a real key important because there is the shared equity schemes that you'll see floating around. That's when the government actually own part of your home. So this first home guarantee is really great because there's no government ownership. And essentially, it helps you enter the market sooner rather than having to save that 20% deposit. You can enter with a minimum 5% deposit. Now, it is important to understand that you are still responsible for the loan and the repayments. And the guarantee, it's not that safety net for you as the buyer, it's for the bank, like I mentioned. And this scheme, there's been some updates to it, which we'll talk about soon, Georgia, from the 1st of October, but it's actually been around since 2020. So it has become more popular each year that it goes along. And we just had a recent 24-25 financial year report released by Housing Australia. And it has shown that now 1 in 3 first home buyers nationally are using the scheme to get into their first home. So it is a very popular scheme to get into your first home. But whether it's the right move depends on your long-term goals and what type of property you're buying. And that's where a good broker will help you assess the bigger picture, look at what you want to achieve out of buying your first home, look at your future goals and your vision as well to make sure that that property is aligned to that kind of vision and what you're wanting to achieve as well.
Yeah, absolutely. And I think you sort of touched on it throughout that sort of explanation around how the program helps people get into their first home. It takes a hell of a lot less time to save up 5% as it does 20%. What other sort of, how else does it help people get into their first home, or how do you see it? What additional benefits do you see for first homeowners?
Yeah, look, good question. And as you mentioned, the biggest thing that the scheme helps reduce is that deposit barrier. So, which can be really big. And when you're saving to buy your first home, it can take a lot of years to save that deposit. So that's where it really helps. Now, again, you can avoid them extra costs like lender's mortgage insurance, which can save you thousands. And it really is bringing your timeline forward to be able to be in the market to be ready to purchase your first home. Now, getting in sooner, it is a great benefit, but you also want to pair that strategically with buying the right home for your goals and your vision as well. And we discussed that in episode 1 of our podcast, First Home Unlocked, where we talk about the different goals, the questions to ask yourself while you're considering purchasing your first home. And I often talk about a runway. Now, when I talk about a runway, it's how long a home will actually suit your life before you need to upgrade or sell. So the longer the runway, the more value or the more growth in equity that you can have, and the vice versa, the shorter the runway, the more risk of needing to sell earlier or upgrade sooner. So we tend to get our clients to aim for a property that will suit you for the next 5 to 10 years. Now, why we do this is the scheme can help you get into the market sooner, like I've mentioned, but we want to make sure that you're buying a property that's going to suit you for that time period. As you can imagine, first home buyers, there's a lot of change in that period of life, starting a family, career changes. So we just want to make sure that you're considering when you're using the scheme, thinking about that property that's going to suit you for that time frame. Now, we really want to make sure that the main benefit is getting you into the market sooner, but again, coming back to your goals and visions and helping you adjust your plan based on what your long-term vision is.
Yeah, I mean, I wish when I bought my first place, I was about 24, 25, and I did
Yeah.
not have the following 5, 6 years in mind when I bought it. And I wish I did because you can make some very costly mistakes if you're not thinking strategically about it. So definitely really relate to needing to understand your goals and sort of a bit more of a long-term vision.
Yeah,
Um,
and that's right, Georgia. Just to jump in there is, as I mentioned, this is helping you get into the market sooner, but you really want to look at the full picture because buying a home, your first home, it isn't cheap. It's hundreds of thousands of dollars. So you just want to make sure you've got that strategy wrapped around you when you are purchasing that first home, and you've got that long vision in your mind as well when you are making that purchase.
Yeah, totally. And as we sort of touched on at the start of this conversation, it's such an emotional experience too. And being grounded in some sort of goal or value to get you there, I think that's so key in making the right decision. In terms of, we've sort of touched on the benefits. Are there any risks that our listeners should know about?
Yes, like everything, there's your benefits and then there's a risk that you also need to be aware of. So I'll run through a few now. So the first one is you're borrowing up to 95% of your loan to value ratio. Now, what loan to value ratio or LVR means is just the purchase price or the property price that you're going to pay compared to your loan amount. Now, the higher that loan amount is compared to that property price, the bigger percentage you have. So you are maxing out your loan to value ratio when you're using the scheme if you use it with a minimum 5% deposit. So what that means is you've got a higher debt to start with and you have less of an equity buffer because there's no ability to increase your loan amount or take any cash out if something was to happen. So that doesn't mean it's a bad option. It just means you need to go in being fully prepared because you can't refinance until that guarantee is removed at 80% loan to value ratio. Now, how you get to an 80% loan to value ratio when you're starting on the scheme is two ways. You've either paid down the loan amount enough that you've got enough spare equity in that property to own 20% of that property, or the property has increased enough in value that you can refinance off the scheme. Now, it's important, and this is where we talk about maintaining a cash buffer to start with. So, not using all of your deposit when you're using the scheme, having that cash buffer set aside. It's just for them emergencies and expenses that you might not cater for. There's a lot of extra costs when you buy your first home. So, we want to make sure you've got that protection from the start because you are maxing out that loan amount. Now, from that latest report, the good news is that the arrears, and when I say arrears, it's just when people haven't made their loan repayments, so they're behind on their loan repayments. It's just 0.3%, which is lower than the industry standard of 0.9%. So, what that shows is people who are using the scheme are keeping up with their mortgage repayments, which is a great fact as well. Now, another big risk to also be considered of is you've got to be careful about the way the scheme is marketed. Now, you must budget for the other upfront costs beyond the initial loan deposit. Now, the way they market it is you can buy with a 5% deposit, which is true, and that's your initial loan deposit. But then you've got all the other upfront costs that you need to cover when buying your first home. Now, we cover this in episode 3 of our podcast where we break it down in detail. But the other costs that you need to be aware of is stamp duty. Now, this can vary state by state. There is first home buyer exemptions and concessions based on the kind of state you're buying in and what purchase price you're buying for as well. You need to also consider your lender and legal fees, so your conveyancing fees, you've got your inspection fees, your moving and furniture costs, and then also setting aside that emergency fund. So they're the other considerations that you need to plan for. And that's where talking to a broker early on, we can map out all them extra costs that you'll need to pay for by settlement. And we can make a really good plan of how that looks using the scheme and what you will actually need on top of that minimum 5% deposit as well.
Yeah.
Now, another risk or another thing to be aware of is that 5% of the purchase price that you're looking to purchase for needs to be genuinely safe. Now, when I say genuinely safe, it needs to have sat in your bank account for at least 3 months is what the banks usually want to see. Now, if you're using something like the First Home Super Saver, that's classed as sitting in your bank account. So it doesn't actually need to physically sit in your bank account. It's as long as you've got it under your name sitting there for at least 3 months. So what that means is you can't get, let's say you want to purchase for $800,000. 5%, that minimum 5% deposit would be that 40,000. Now, you can't get a gift from your mum and dad and they give you $40,000 and then tomorrow you use the first home guarantee scheme. That needs to be sitting in your bank account for at least 3 months. Now, the other risk is that there is price caps in certain states and areas across Australia that you need to consider. So, why I say that as a risk is just because you want to be finding that high quality asset, and sometimes it can be challenging across some areas in Australia with the price limits or the price caps that you have available to you. And the last big risk that I just want to mention is that you can't convert this to an investment property. So while you're using the scheme, you actually have to live in the property as your principal place of residence until the scheme is off or you've removed the scheme. So you can't actually convert it into an investment property in a year's time. It's specifically for first home buyers who are looking to move in and live in their property as well.
Yeah, that's a really interesting last point and not something that I was actually aware of because I think that that was sort of like the general when people were being negative about the scheme, there was a lot of talk about people just, people who didn't need the scheme buying up a bunch of investment properties. So that's really good to know that that's a rule that's in place. I think it's also really important for our members, especially when they're strategizing, not just for this home, but for their overall financial goals. Because if their plan is to rent best or flip the house and turn it into an investment property in the next year while using that scheme, it is going to take a lot longer because they will need to meet that additional sort of 15% deposit, correct?
Yes, that's exactly right. And that's why we talk really focus on that asset quality piece, because if that property's growing for you in value, well, that's getting you closer to removing that scheme and then opening your options. So it is that stepping stone or that stepping tool to get into the market. Now, there is the regulation that you need to live in that property. And this is things to focus on. On average, the scheme is eligible or people are using the scheme for up to 29 months is the average. And that's where they've either paid down the loan amount enough or the value of the property has increased enough. So that's also good to factor into your plans. Because if you were looking at using this scheme, I'll just buy a property and in the next year I'll flip it to an investment property. Yes, that may be you may be able to do that if the property value has increased enough, but it's quite likely that it's going to take longer for that property to increase enough in value for you to be under that 80% to then convert it to an investment property. So these are the conversations we're having every day with first home buyers about and why it brings back that important point of planning for the next 5 to 10 years. How does that look?
Yeah, I think that's a super important conversation to be having. It's not just a single transaction and off you go. You sort of touched on eligibility before. Who is and isn't eligible and why?
Yeah, so I'll just list off the eligibility so people could kind of tick it off as they're listening as well. So the eligibility checklist is that you need to be an Australian citizen or permanent resident. You must be 18 years or older. Your deposit needs to be a minimum 5% deposit saved or between 20%. So you can purchase using the first home guarantee scheme with more than a 5% deposit and less than a 20% deposit. So that's something to be aware of. You must be a first home buyer. And they have brought in a rule in the last couple of years where if you haven't owned a property for the last 10 years, you actually are eligible under the first home guarantee scheme, which is a really niche rule as well. So it's really helping them people who have been out of the market for quite a while get back into that market sooner as well. Now, as I mentioned, the property must be within price caps which vary across Australia. So as I mentioned before, on October 1st, there has been an increase to these property price caps in most states and territories in Australia. So, for example, in Sydney and some regional areas in New South Wales, like Illawarra, Newcastle, and Lake Macquarie, the cap has increased to $1.5 million, while the rest of the state outside of these areas, your price cap has increased to 800,000. So, that's good to be aware of the changes that have happened on October 1st as well. as well as the price caps increasing, they've removed the income caps. So it doesn't matter how much you earn as a first home buyer, you can now access the scheme. And then there's also, they used to have places, a certain amount of places per financial year to use. They've also removed that. So there's no limit of how many places can be used using the scheme. So what these changes have done is pretty much opened it up to any genuine first home buyer who wants to use the scheme can access the scheme. Now, the last couple of eligibility points are just you must be a home to live in. So, like we talked about, no investment properties. And you can apply solo or you can do it with one other person. So, either a partner, friend, or family member, but they must also meet all the eligibility criteria that I just mentioned as well.
Yeah, so you can't have one person who's purchased a home before buying their second home with a partner who's never bought before. You have to both be first homeowners, correct?
Yes, exactly right.
Yeah, cool. And you sort of touched on those price caps in certain areas, so being aware of what your price cap is in your area, but are there any other restrictions on the properties you can buy using the scheme?
Yeah, so that price cap is the really big one. There is a wide range of properties you can buy when using the first home guarantee scheme, which is great. So you've got newer existing homes, houses, townhouses, apartments, house and land packages. You can purchase off the plan, apartments or purchases. And you also can purchase vacant land, but you must have a building contract attached to that as well. So you can purchase that vacant land, and then if that building contract's going to take 6 months to begin, you can use that using the first home guarantee scheme as well.
Yeah, and how do you actually go about accessing the scheme?
Yeah, so it's a good question. I just want to go back for a second because there is the properties that the scheme allows, but also we've got to consider that the lenders are also coming into the picture as well. So there's the scheme that has their rules on what properties you can purchase, but then the lenders also have their own rules of property types that they want to lend against. So each lender has their own rules and regulations based on that property type, things like construction timelines, off the plan purchases, and smaller apartments. So that's why, as a broker, we order valuations as part of the process. And that can show is make sure that that kind of property is going to meet both the scheme requirements and the lender requirements as well. And this is where it's good to get an experienced broker who knows straight away what kind of properties both the lender and scheme will tick off and be able to talk you through that. So you're not wasting your time up front looking at properties that aren't going to match either by the scheme or the lender as well.
Yeah, definitely. And you're not getting emotionally attached to something that you love that
Yes,
you can buy.
yes, exactly right. So, Georgia, you asked about how to actually apply for the scheme and how does that work. So, you have to apply via a participating lender or a broker. Now, a broker will compare all the different lender options that are available on the scheme. And the great thing is that there's no charge to the customer to work with a broker. So some brokers will have a fee to work with them. At Alcove and First Home Unlocked, we don't. So we can make plans with you, talk with you, and talk through how to structure this to make sure that you're on the right path and that we're comparing all the different lender options. Now, we can compare different income types, employments, and situations, which can mean a big difference between what one bank is willing to give you versus another. We handle all the eligibility checks and lender matching, and timing matters. We really want to help you prepare early. So if you're not ready to buy right now, next week, we are also happy to have conversations with you to work out what does this plan look like early on, because that early preparation really makes for a smoother journey, especially as a first home buyer. Now, when you are going through that stage and let's say you are wanting to purchase, we definitely recommend getting pre-approval organized, which we can help you with, comparing all them options for you, talking you through that. Then once you do choose that lender, we can help you get pre-approved, which pretty much means that the bank has assessed all your income and is happy to give you a loan to a certain amount. And then that really helps you when you go to start making offers and looking at properties. You're really confident that the bank's going to be able to give you that loan amount that you've been pre-approved for as well. Now, with another bonus that we do here at Alcove and First Home Unlocked is that we review once you have purchased, we actually review your property every 6 months. So what we do is we check in with you every 6 months, review your rates, make sure you're at the best lender option still, and especially, which is really important, using the scheme, we run some valuation. So we get that updated valuation done so you can see where that equity is sitting and if you can exit the scheme earlier than that on average 29 months. So we really want to be proactive in after you have purchased, being able to stay on top of that. Now, when you go direct to the bank, they're not going to give you them proactive reviews and they don't change them rates or chase you the best option. And when you do go to that bank, they're going to give you their one lender option where we have many different options available under the scheme that we can compare all of them for you, as I mentioned.
Yeah, I mean, just speaking from personal experience, when I did purchase that place a few years ago, and I purchased on my own, and I purchased it as a single person, with just a regular salary. It was during that time that interest rates were quite low, and the barriers to entry were less than what they are now. Super simple, super straightforward. I used a broker at the time, but didn't really understand the ins and outs of what they did in the back end. And then this time around, I bought with a partner. He's self-employed. I've had more of a financial history, and so has he. And bringing those two together, and what one bank might accept him and then not accept me, and then one bank might accept me and not accept him. And we found that really, really challenging, and definitely not something that even as a financial advisor I could have navigated on my own. It's great to have somebody in your corner working on this, because like even going through the application process can be a second job if you don't have a broker with you handling it. It would have been impossible. And there's other things to think about if you're applying for credit with just a singular bank. What are those implications on your credit score and things like that? So there's so many things that even in financial advice, doing this every single day, that you don't realize, having a mortgage broker in your corner when you're going through this experience, like absolutely life changing. Like it's just you couldn't do it without a broker, I don't think.
Yeah,
Um,
and that's right as well. Like, because especially talking to first home buyers, like we aren't taught how to buy a first home. So there's already a lot of emotion involved. It's your first time doing something. We're a professional that can definitely help. We don't cost you anything to actually use this, and we compare all them options and take a lot of the guesswork and the strategic work out of that out of you having to do it yourself and present that to you and talk you through our experience, what we think, how the buying process actually works. So there's a lot that we like to take off our clients so they can just focus on, okay, what's my goals look like? What's my vision look like? What's the right property for me? And how does this all fit rather than trying to do the admin stuff and application work like you mentioned, Georgia?
yeah, absolutely. Um, in terms of the home guarantee scheme, now I think I made this mistake at the start of this conversation. There's quite a few government schemes.
Yeah.
There's schemes at federal level, and then there's also schemes state by state. You've got things like the First Home Super Saver scheme, where you can put money away into super and draw down some of that to go towards your first deposit. And these are definitely conversations that could go on for hours and hours and hours. There's so many different layers and so many different schemes. But can the home guarantee scheme, so the one that we've been talking about specifically today, can that be used alongside any other government schemes?
Yes, good question. And you're right, there is so many schemes out there. Unfortunately, they all sound very similar as well. They all use the scheme first home and it gets confusing. So, yes, to answer your question directly, you can use the first home guarantee scheme and the first home super saver scheme together. So you can also use your stamp duty concessions and exemptions based on what state and purchase price you're purchasing for as well. So an example of this is withdraw your first home super you can withdraw your first home super saver savings from your super account, contribute that towards your 5% deposit because that's classed as genuine savings because you've had it sitting in your super. And you're still eligible for the first home guarantee scheme and then to use them stamp duty exemptions and concessions as well. So it's really about layering the support that's available, but timing does matter, especially when you're using the first home super saver scheme. And the release process can take some time. And when you are looking for your first home, you're starting to make offers, that can speed up the process. So you just want to make sure that you've got all your ducks in a line, everything's lined up, and that's where a broker can really help talk you through when's the best time to release them funds and things like that. And we deep dive into that on episode 9 of the podcast. I did just see a comment. What's the podcast called? First Home Unlocked is the podcast name. So we deep dive into kind of the first home super saver, the timing around it, because there is some just boxes that you need to tick when you are releasing them funds to make sure that you get it in time and you're doing the right thing as well. And that's where the right plan helps. All these programs work together seamlessly, and that clear timeline equals that smoother approval and then that faster settlement and getting you into your first home as well.
Yeah, definitely. What do you think is your top tip for someone just starting their first home journey?
Yeah, I mentioned it earlier, but coming and speaking to us as early as you think, like 6 to 12 months out is an ideal timeline. But if you're considering or thinking about buying your first home, come and speak to a broker early. We will help guide you through that process. There's a lot that you can be doing now that might not look good in the bank's eyes. And because we're working with the banks every single day, we can help straighten that up. There's a lot of things to understand around income verification. So, like you mentioned before, Georgia, PAYG versus self-employed is just there's so many different ways that that income can be used. You've got your genuine savings history, and we can look at also your credit report. If there's something that's a red flag on there, we can help get that fixed and look at how would your position look in the bank if the in the eyes of the bank right now. And from point A to point B, what can we do now to improve that position as well? Now, also, another thing by talking to a broker early is we can help you with the buying process in general. So, because, like I mentioned, we haven't been taught how to buy our first home, it's very overwhelming. There's a lot of emotions at that time. You've got a lot of advice coming from parents or family and friends. So, we really want to talk you through how that buying process works. Now, in the podcast, we go through that in detail from episode 1 to 8. So, you'll be able to listen through all them episodes and understand how the first home buying journey would look. And we also cover all the grants and schemes that we're talking about today in more detail. So, really, that number one tip is get prepared early. That early preparation gives you the confidence and control. You don't want to be coming and speaking to a broker 2 weeks before you're looking at purchasing your first home, because if there is something that you have been doing or there's a red flag that we could have fixed 6 months ago, that way you're just putting extra stress on yourself. So please come and speak to us early. We're happy to have that chat, to share all our knowledge as well and get you prepared as soon as possible. And another thing is, Georgia, is especially with these schemes helping you get into the market sooner. It's been a lot of times where I've been speaking to first home buyer clients. They say, I'm 6 to 12 months away from purchasing. I just wanted to have a chat. We go through all their numbers, we write out a strategy, and they're actually in a position to purchase now with them right buffers, with being able to leverage the scheme and stamp duty concessions and things. So it's that old saying, you don't know what you don't know. So come and speak to us early. We're happy to have that chat early on and make that really solid plan or help you get into action mode as well.
Yeah, definitely. I've noticed with a lot of our members, their mindset is okay, 6 to 12 months, I can buy, and we suggest reach out to a mortgage broker and see what the figures might look like with the value that you're looking for, and often they come back to us and say, oh, actually, I can buy a hell of a lot sooner than I thought. You're totally right. Like you just don't know what you don't know. You need somebody to assess all of your different lending options and assist you in making the right steps to get there. And definitely don't put a bid on a house at auction without coming to see you guys first. In terms of how our members can get in contact with you, we'll sort of jump to questions in a couple of minutes, but just keen to understand how our members, if they're looking to start their home journey, how can they get in touch with you?
Yeah. So we will share off the back of this webinar, we'll have a link that you can directly book in with. Liam will share that around to everyone and all the members so you can book in via that link. Or you can search us up online. I've obviously mentioned the podcast. We've got Alcove as well. So alcove.com.au is our website. You can jump on there, see our team, and we've got plenty of links to book in as well. So there's plenty of options to get in contact with us. We're here and ready when you are. So yeah, if you're feeling the itch to buy your first home, it's a good time of year coming into the end of this year. Usually a good way to start the new year is to focus on that first home buying journey. So we're ready to help you in any way that we can. So there'll be links everywhere for you to book in. And yeah, happy for you to jump in and have a chat with us.
Yeah, amazing. Thanks so much, Jack. Now, for the
Yes.
last sort of 10 minutes of the webinar, we will be throwing out the opportunity for members or anyone that's still logged in to ask a couple of questions. We will also be sending a Fox and Hair survey at the end of this session, just for feedback and anything that we can sort of improve on and what you enjoyed out of today's session. In terms of questions, while we wait for sort of the chat to go off, I can share with you a very unique experience that I had and why I was like, thank God I had a mortgage broker. With the most recent experience, um, we had put an offer on the place. We had sort of got and a light understanding of what our budget might be, but hadn't got pre-approval. So we put an offer on a place subject to finance. And as we're sort of going through the process of getting everything sorted, sent everything off, and it was the day that we needed to like send all the final numbers off to the bank, and the finance was due the following day. And that day, my data must have been leaked. My personal data was leaked in some breach, and
Yeah.
my credit had been fully hacked. Somebody was trying to open like all of these personal loan accounts and credit accounts under my personal name. And so I had to like call my mortgage broker and explain to him, like, I haven't been opening all these credit card accounts. Like, what do I do? And he was just like, these are the steps you need to take. We'll submit it off to the bank, then you can close your credit. But if I didn't have him there and he was answering the phone at bloody 7 p.m., me stressing out, like just having somebody, it's already so emotional buying a house because this is where you're gonna potentially start your family. This is where you're going to live your life. You're buying something that you care about, that you want for a really long time. It's massive, probably the biggest thing you'll ever buy.
Yeah.
Having somebody like yourself in your corner who knows the ins and outs, like I would have had a mental breakdown if I didn't have my broker with me during that period.
Yeah. Yeah, and that's the thing. That's the key part of it is, like I said before, we're acting for you in your best interest. So we're working with the banks every single day. We know policies, we know ways around it, and we're experienced, especially here at Alco. We've had over 10 years experience in the broking space. So there's a lot that we have gone through. There's a lot of stories like you've just said, Georgia, that we've helped clients through as well. So we've got that experience. We know how to help, and we're definitely there to help you in your corner, there to act for you in the eyes of the bank and make it as smooth as possible.
Yeah, excellent. So we haven't had any questions come into the chat, so I definitely recommend if you've got any questions, we've got a couple of minutes left in the webinar, so please feel free to shoot them through. Jack, is there anything else you've from the scheme, property purchasing? What are you seeing the most come through to you? What are sort of the common mistakes people make? Is there anything that you sort of want to end this webinar having people know before they start their journey?
Yeah, look, I think the really key thing to walk away from this is yes, the scheme is a tool. It is a tool to help you get into the market sooner. But what you want to do is make sure that you've got your goals and your vision and your property journey mapped out first. So asking these questions to begin with just helps you come to it grounded. If you're just purchasing just because you want to get into the market and you're feeling under pressure, under them rush decisions, that's where, like you mentioned before, it's a very costly mistake that you can make because let's say you rush into a purchase in a year or two's time, you meet a partner and you want to sell because you want to get a bigger house. Now, what that means is that you have the selling costs of selling your actual property, and then you also have the buying costs. So it can be very, very expensive. And in that short term in the market, maybe your property that you purchased originally hasn't grown in value. So this is where we come back to being grounded about it, talking through your goals, your visions. What does this property and how is it going to leverage your life? Not making the decision based on, well, I've got access to this first home guarantee scheme. Yes, some prices are going up, so I'm just going to use it. Come and talk to us. We can talk about them goals and visions and make sure that the property is actually benefiting your life rather than in 2 or 3 years' time you hit a really big roadblock and it's actually putting you backwards as well.
Yeah, fantastic. So we've got a couple of questions in the chat that we'll finish off with. So the first one is you said up to 15% that the government will guarantee. Does this mean you can come in with 15% and the government would cover at least five?
Yes, so that's right. Liam, thanks for asking that question. So with that one, as I said, you've got that minimum 5% deposit that you need to come up with. Now, let's say you had 15% and there was that gap of 5%. That's right, the government would cover that. So the minimum to enter is just that 5%, but you could have that 10% saved, 15% saved and use that. As long as it's under that 20%, whatever the gap is, the government will cover that.
Yeah, amazing. And what role does the government play beyond the guarantor of the property? Does the government have a say in certain things like property management or what happens when you refinance the mortgage? Do you have to give the government any money? Do they have any sort of claim on the property?
Yeah, so that's a really good question. So, like I mentioned, that's the more of the shared equity route as well with that. So, the guarantee scheme is great because the government is just acting as a guarantor. They don't have any ownership over the property. They don't ask you about maintenance. You don't have to communicate with the government when you refinance or anything like that. Now, different is the first home shared equity schemes, which there is a federal one about to be released, but it's usually state by state. There's different shared equity. This is where the government actually has ownership in your property. So that's where you've got to do things like the government does have a lot of say. If you're doing renovations and things like that, they do have a lot of say in that. You have to communicate with them, and you really only have one or two lender options, and you can't refinance until you've paid back that government portion. So that's the really great thing about the first home guarantee scheme is yes, the government is involved as a guarantor, but they don't actually have any ownership in the property or any say over it.
Yeah, fantastic. Well, I think that sort of comes to the end of the webinar. There's a lot to digest and take out of this. The scheme that we've covered off today is just one very, very small portion of a wider, um, wider job to do when you're purchasing a home. So really, really keen to get people in touch with you should they be looking for their first home or a home. But other than that, thank you so much, Jack. As we mentioned, we'll be sending out a link to book in a time with Jack if you would like to meet with him. We'll also be sending details about Jack's podcast out after this webinar too. And there is also a survey as well. We'd love your feedback on what you liked and areas that we can improve on today's webinar. But other than that, thank you, Jack, so much. And thank you everyone that's jumped on today. It's been a really good chat, and I feel like we could go on for hours about the ins and outs of this, but we've only got 45 minutes, so we'll end it there.
Yeah, thank you so much, Georgia, and thank you to everyone who has jumped on and listened and who will listen in the future as well. Yeah, happy to have a chat. Use the links, jump in. We can make that plan and really get you confident and feeling good going into the new year about purchasing your first home. But thank you so much, Georgia and Liam, for organising this and having me on. I really appreciated your time and everyone who's joined.
No worries. Thanks, Jack. Thanks,
Thank
everyone.
you. Bye.
See ya.